And he's Chief Investment Officer, Andersen Capital Management. Peter, thank you so much for your time today. So S&P crossing that 7,500 mark. How significant is this given AI momentum has been credited for the gain so far?
Yes, the AI momentum is the main driver. And we're seeing now that playing in AI is not only just buying NVIDIA. Now what we're seeing is the market is evolving beyond NVIDIA into construction projects. So there's networking, cooling, power, manufacturing, all these secondary contributors to the establishment of AI and the continuing interest by large corporations in artificial intelligence really is fueling the market. So, rather than a broad rally, what we're seeing is a very intensive focus on technology. And I might also add that we noticed with President Trump's party that he selected to accompany him to China, all of them are technology CEOs. There are no CEOs there that have to do anything but technology. I think that's a fairly telling point, too.
Yeah. So what do you think the message is? The message that he's trying to send is by having all these tech CEOs accompany him. And what can it do for the market, the tech market, both in China and the U.S.?
It's sending a very, very strong signal that I think he is representing the United States as the leader in all things artificial intelligence and just broader technology. So that kind of sets the stage when he goes to an excursion like this for reactions to the Chinese leaders. And it probably challenges them also to flex their technological muscle so that there will be some type of equilibrium or détente between the two in terms of the technology challenge. So I don't expect that to actually change because China certainly does have its version of AI, American AI technology. And so I would think it would be better that NVIDIA has been able to share some of its products with China, as you mentioned in this opening segment. I think that's a very positive sign that the two might actually try to work more closely together rather than just symbolically shaking hands.
Yeah. I mean, nevertheless, this is going to show up already strong sentiment. And that's something that we saw today, referring to Cerberus, which opened at $350, which means that it's actually nearly double the IPO price. So it now puts it at about $100 billion valuation. Based on maybe what you can assess from what the future earnings potential is going to be, do you think Cerberus can justify these levels?
Well, this is a little bit worrisome, of course, because it's slightly reminiscent of the later days of the so-called dot-com excursion, where IPOs were red hot and took off like this. So some of us are looking at this with the pains that we remember back then in the dot-com period. Usually there is such a frenzy for a technology company like this at this point in the cycle that it isn't really sustainable. So I would not be surprised if this stock took back a great deal of its appreciation as time leveled out in, say, probably several days from now. However, it does signal that there is a almost insurmountable demand for AI-related technology. And one of the things we worry about is the spending, of course, is real. But, what about the return on investment? That will take time. And I think that there is a healthy skepticism developing about whether or not we will actually see profits from all this spending.
And Peter, just talking about, risk assets, we're seeing Bitcoin kind of top $80,000 as well. That's after, I think, the Senate Banking Committee advanced a landmark U.S. digital asset market structure bill. So to you, I mean, does this make things clearer for traditional asset managers to perhaps increase their allocations? I mean, where do things stand now?
It certainly validates it. It's one more step in validation. However, I think Bitcoin now and cryptocurrency in general is establishing itself as dare I say, just another asset class, not the worldwide accepted currency that its founders were envisioning, but it seems to be finding its way now as to just another currency, or just another asset class, I should say. You know, there have been many critics and supporters of Bitcoin saying that it should be a hedge against inflation, but as we saw, that really didn't work out. And it's still trying to find its voice as to how it fits in your portfolio. This is one positive step, but I still think that it needs more maturity before we can actually assign it a definite place in a portfolio and define it as to what kind of an asset class it is. I don't think that it will ever replace the hard currencies that that exist today.
All right, Peter, I really appreciate your time today. Peter Andersen there, he's Chief Investment Officer at Andersen Capital Management. Well, U.S. Federal Reserve